Okay, I'm sorry. As I was saying, advertising of products and services, that would be a sales or marketing cost. Batteries used in manufacturing trucks, that's a variable cost. The more trucks we make, the more batteries we're going to use. Commissions to salespersons is variable. Insurance on a dentist's office is fixed. Leather used in manufacturing footballs. The more footballs I make, the more leather I'm going to use. It's variable. Rent on a medical center, that's fixed. This is up here I have an example of homework problem 3. And we have Bob Company has fixed costs of $2,000. Remember, fixed costs remain constant, so no matter what the activity level, fixed cost is $2,000. And the variable costs are 50 cents each. So we're looking at 3 levels of activity, 1,200, 400, 1,600. So to determine our total variable costs, we're going to take the 50-cent variable cost and multiply it by 1,200 for the 1,200 units, which gives us 600. We'll multiply 50 cents by 1,400 for 1,400 units, which gives us 700. And we'll multiply 50 cents by 1,600 units, which gives us a total of 800. If you add the fixed and variable together, you get the total cost. So at a level of activity of 1,200, my total cost is 2,600. At 1,400, my total cost is 2,700. At 1,600, my total cost is 2,800. To determine the average, when I'm looking at my average cost per unit, all I have to do is take my total divided by the units. And I took it to 3 decimal places because I think in your homework you have to do that also. So 2,600 divided by 1,200 is 2.167. 2,700 divided by 1,400 is 1.929. And 2,800 divided by 1,600 is 1.750. The average cost per unit, you'll notice, as our number of units increases that we produce, our average cost per unit to produce those units decreases. Okay, go ahead and move on to page 2. And we're going to talk about product costs. There's 3 different components of a product cost. Direct materials, direct labor, and overhead. The easiest way to think about a product cost is to think of your building, divide it in 2. And one part of the building, you are manufacturing a product, like a factory. Every single cost incurred in that factory is a product cost. The other part of the building is your sales, marketing, your general administrative costs. That's everything else. So that's a period cost. So when we look at our product costs, direct materials are the materials that are easily and conveniently traced to the manufacturing of a product. So if I was making a wooden chair, wood would be a direct material. If there were any types of perhaps steel part of the chair, that would be a direct material. Things like glue or inexpensive nuts and bolts, that would be an indirect material. So only direct material would be kept within this direct material idea. Direct labor is the people putting the product together. It's often called touch labor because they put the product together. So those people assembling or painting the product, that's your direct labor. Everything else going on in that factory is overhead. So anything going on in the factory has to either be direct material, direct labor, or overhead. So your overhead's going to encompass everything else, like your supervisor's salary, foreman's salary, security guard's salary, depreciation or rent on the building or machines, everything else, your property taxes on the factory. Everything else going on in that factory will be overhead if it's not direct materials and it's not direct labor. If we look at the bottom, I have a graph to divide items between product costs and period costs. So the cost of the memory chips used in a radar set, that would be a product cost. That's part of making the product. Factory heating costs, product costs. It's happening in the factory. Factory equipment maintenance cost, product cost, happening in the factory. Training costs for new administrative employees. That would be a period cost. That is not happening in the factory. Cost of tools used in assembly, product cost, happening in the factory. Travel costs of salespersons, period costs, that's not happening in the factory. Wages and salaries of factory security personnel, product cost, happening in the factory. Air conditioning for executive offices, that's a period cost. It is not happening in the factory. Wages in the department that bills customers, period costs, not happening in the factory. Depreciation on fitness equipment used by factory workers, that is a product cost. It's happening in the factory. Telephone expenses incurred by factory management, product cost, happening in the factory. Cost of shipping completed radar sets to customers, that is a period cost. Our shipping charges are always period costs. Wages of worker who assemble the radar sets, that's a product cost. President's salary, that's a period cost. Health insurance premiums for factory personnel, part of the factory, it's a product cost. So if you want to go through this a couple times, it might make more sense. But you just have to think in your head, did it happen in the factory? If it did, it's a product cost. When we have, on our balance sheet, it's a little more complex for a manufacturing company than a merchandising company. For a merchandising company, remember on that balance sheet, if we're selling these pens, that's our inventory pens, one class of inventory. Manufacturing company is a little more complex. We have 3 components of inventory in that balance sheet. We have raw materials, and that's all the materials that are going to go into making our product. We have work in process, that's when we're making the product. And then we have finished goods, where it's our product's done and all ready to sell. So all of those costs, those product costs, are held as inventory until the point we actually sell the item. At the point we sell it, that's when we expense it out onto the income statement as cost of goods sold. Okay, the next item, if you look at the next page, and this I hope will help you with number 1, I've divided things, a number of items to say if they're fixed or variable, product or period, and if they are product, are they direct material, direct labor, or overhead? So our first one is property taxes on the factory. It's fixed. Property taxes are a fixed item. Remember, they're going to remain constant. They're not changing, no matter how many units we produce. It is a product cost, right? It's happening in the factory. It's a product cost. If it's not direct materials and it's not direct labor, it's overhead. So this would be overhead. Salesperson's commissions. It's a variable cost, and it's a period cost. Expensed out as incurred. A factory supervisor's salary. That's a fixed cost, and it's a product cost. And again, it's not direct materials, and it's not direct labor, so it's an overhead cost. Wages of workers who assemble products, or assemble components. That's a variable cost. Product cost, right, it's in the factory. It's direct labor. They're actually touching the product. Tires used in automobile production. It's a variable cost. It's a product cost happening in the factory, and that's direct materials. It's an actual direct material cost. Shipping costs of merchandise sold. Variable cost, and it's a period cost. Automobiles for company executives. That's a fixed cost, and it's a period cost. Cost of AM, FM car stereos with CD players. Well, that's to manufacture the car, so that's a variable cost. The more cars we make, the more we'll use. It's product cost, right? It's happening in the factory, and that's direct materials. Lubricants for machinery. Variable cost, but it's happening in the factory. It's a product cost. It's not a direct material, it's an indirect material, so that's overhead. Cost of workers painting a product. It's a variable cost. It's touch labor, right? That's going to be direct labor, and it's a product cost happening in the factory. Utilities for administrative offices. That is, it could be fixed, it could be variable. In this case, we're going to assume it's a fixed cost, but that could be a variable cost. It depends on the situation. It's a period cost. We're expensing it out as incurred. Utilities for factory machinery. Definitely variable. The more machinery we use, the different the cost will be. It's a product cost, right? It's happening in the factory. And it's overhead, right? It's not direct materials, it's not direct labor, so it's overhead. Utilities for the factory building itself. Chances are, again, it's one of those that could be either one, but chances are it's a fixed cost. product again, as it's happening in the factory, not direct materials, not direct labor, so it's overhead. And the plant manager's salary, fixed cost, it's happening in the factory, it's product, and again, it's part of overhead. So let's go ahead and move on to homework problem example 4.